the end of the video, I will give you a really valuable piece of information. I will give you a really nice little map that you can actually use in your trade. Stick around for that, and other than that, enjoy the video. In this video, I quickly wanted to cover why some of you guys' ICT setups are failing, and I see these over and over again. Of course, if you use the model that I'm going to show, you're going to take losses. You're going to take really low probability setups, and I'm going to show you exactly why you're failing and how to solve it and what the actual proper model is looking like. So as we can all see on screen right now is the ICT Core 2022 entry model. You would be looking into this displacement like you would be looking for a fair value gap, 50% level of your FIP, and then you would be taking a short targeting the next logical level of liquidity. But there's a really big issue with this. The first thing people are doing is they are blindly taking setups like this. So they go to the 1 minute, they wait for a setup like this, they wait for a market structure shift right here, and they actually take a trade. That's the first big issue that comes to mind. You want to be taking these setups in points of interest. What is a point of interest? Well, let's say on the 15 minute, for example, you see that liquidity gets taken. So right here, we notice that we have 15 minute liquidity taken. So there is 15 minute liquidity swept. And at this point, yes, this is a high probable setup. Now, what I also see a lot of people do is the following. So this, to be precise, this is a high probability setup because as you can see, we violate that 15 minute liquidity. We then have a strong shift and displacement down, breaking that previous market structure before we actually had to sweep. This is something that I see a lot of people do. So we break 15 minute liquidity. We then rally up and go down. And then people would register this right here as our market structure shift, but that's completely wrong. There is no market structure shift yet because the chart would look something like this, and what actually took out that liquidity, that was this level right here. So you could consider this indeed as a market structure shift, but it's going to be a weak market structure shift because that is not the actual market structure that broke the strong high right there. That's actually this. If you take entries off of this leg, you could easily see price doing something like this. I'm not saying that this doesn't work because this is not the weakest model out there, because of course we do sweep liquidity right here as well, right? But this is going to be a lower probability setup than if you would see something like this, 15 minute liquidity taken out, and then your actual market structure shift right here. So in this case, the market structure shift is also a change of character. I'm sure you heard about that term, but in this case right here, it's really not a change of character. And there is yet another example, something that I see a lot of people actually do. Let's neglect the 15 minute liquidity for now. And what do I see people do? It's the following. So basically you have your model and then you see something happening like this. We go up again and then down again. And now people say, okay, this is the market structure shift. There is one fundamentally big problem with this, and that is that there is no liquidity taken by this high right here. And if this high didn't take any liquidity, then what is it? Then it's an inducement of liquidity. So basically what you're doing here is you're going to be taking a trade right here in a fair value gap, let's say, but you're basically going to put your stop loss exactly where the liquidity is resting. So this is also not a viable model. So what you want to see is that this high actually takes out that previous high, and we then have a market structure shift with strong displacement. And this being our market structure shift, of course. And I was talking about 15 minute liquidity, for example, but what we could also do is take into account higher time frame fair value gap. So if you see prices filling up a fair value gap, you then have your market structure shift. That's really nice. But then again, if you take something like this, this is not the market structure shift right here, because again, we didn't take out any liquidity. So where would the market structure shift be? Right here. So you would have to wait till we actually violate this level right here. And at that point, you have a market structure shift. And at that point, you can start looking at an entry off of a fair value gap in that premium level right there. And then there is another thing that I'm really seeing a lot of people do. And ICT talks about this and calls this valid. But in my opinion, and at least that's what my data shows, so no disrespect to ICT. If it works for him, that's great. But what I see a lot of people doing is the following. They will have their model, they will have their setup, and then they notice that we do something like this. So we do sweep this low and we have our market structure shift, but it's happening by a simple wick, right? If we just wick down and don't really show clean displacement, then there is no entry. It's simple as that, because these are becoming relative equal lows. Okay, we will take that out. There's a big chance that we will take that out, but this is not really the market showing its hand to you, right? It's showing that it's building liquidity under here. So this could be a valid target for you if you were to take a short. This could be something to take, but the risk to reward is usually not going to be worth it. In this case, it's quite okay, 1.5, it's not that bad. But what you will usually see is something like this. We take out that liquidity to continue fuel a move up, because this is not a true market structure shift with a true displacement that ICT talks about quite often. So you would have to have something like this. You really want to at least aim for a body close below that market structure shift and have a decent amount of displacement. And those were the theoretical things. And now I'm quickly want to cover a chart example to show you that a mistake is that I see a lot of my students actually make, and that is the following. If we look at market structure, if I look at market structure, at least I define strong parts of structure, right? So we have a low, we have a high, we have a low, we have a decent enough pullback, so I'd call that a high, and we have a low again, a high, a low, and then here is our next high that actually violates all of this. But what I see a lot of people do is they would take into account this little pullback right here. If we compare this pullback to this one, this is a minor pullback. This is not real structure. This is just the market breathing, doing its thing, right? So if you consider this to be valid market structure, and you would say that this is your market structure shift, for example, which I see a lot of people do. So they say, okay, we actually have our valid model, and we remove the highlights right here. They would say, okay, we swept this low right here. We then had a strong reaction up. We have our fair value gap. Let's actually take an entry from here, cover the low, and you notice that you actually get stopped out. Now, when is the true market structure shift happening? Well, it's as soon as we violate that previous bit of structure, because we have to violate the market structure for it to shift. So right here is where your market structure shift is actually going to be. This is not your market structure shift at all. This is invalid. And at that point, you can actually start looking at an entry. So let's say you can take an entry off of the fair value gap right here and actually take a long position right here over something like this, and then hope that this is going to be playing out. So that is a valid market structure shift. And again, if we zoom out, we can see that we actually did take some liquidity to the left here as well. And a combination of more liquidity being taken and then also you seeing a sweep of liquidity to the left, which is going to be this right here. That's going to build up a strong market structure shift. That's going to be a strong model for you. So we first have a break of structure right here, or let's call it a sweep. Then we sweep more liquidity from the left-hand side. And ideally, this would be 15-minute liquidity, right? Something from a higher time frame, a strong time frame. And then you can actually start looking for your market structure shift. Really think about, okay, how is my market structure looking? And don't be looking at charts like this. I see a lot of people looking at charts like this. On the 1 minute, this does not make any sense. You need to keep in mind that Forex doesn't have a clean delivery like futures does. So ICT is often going to be zooming in quite a bit, and it's going to work for futures because futures are really reactive, really strongly moving. So on futures, this might work, but on Forex, you really need to zoom out a little. Even use the line chart if you want to, and look for those decent pullbacks. If you look at this, do you think that this is a valid bit of structure? This bit right here, I don't think it is valid structure. This to me is just consolidation and then a move up. And this was our true, we mark it out. This was our true lower high. And this was our true lower low for us to then make a higher high. This is where our market structure shift occurs. All of this is just noise. At least that is how I look at it. And I back this by data, right? I'm not just saying this out of the blue because I think this is the way. No, this is actually what my data is showing. I collect data on everything. I suggest you do the same. Look into these things. Don't take my word for it and actually start looking at it. Now you made it to the end of the video. I'm going to give you a nice little reward. I actually created this map right here. This map shows you what valid market structure shifts are, what invalid market structure shifts are. Feel free to take a screenshot of this and save it somewhere. It's going to be really important. It's going to really help you take strong setups and weak setups. So just to remind you, a valid market structure shift breaks the previous high and then actually violates that low. This is a bearish example and this is a bullish example. I mean, you would take a bullish trade here, there a bearish trade. And then right here, this is also valid. We sweep major liquidity. Best case, we actually sweep liquidity from the higher time frame. We then see that we move down. We have our initial weak market structure shift. And then here, because that was the low from the previous liquidity, this is going to be the really strong market structure. And this again is a weak market structure shift because we didn't take out that high right there. So there is liquidity induced right here. And that's why this is a weak market structure shift. Here is the true one. And then this is basically the same. So right here we have major liquidity being taken. me actually align these a little bit. These are relative equal lows. We take them out. So that's a sweep right there. We then have a move down, a weak market structure shift, because this does not violate that. Not sure why this is there twice, but so this does not violate this low right here. Hence, that's a weak market structure shift. And then the true market structure shift occurs. And then you can actually start looking for entries within this whole price leg right here. And of course, take an entry from a discount, and for a bearish example from a premium zone. And then again, these are the invalid ones, which is basically where you can see that, okay, we take out liquidity with this high, but this is not the market structure shift. Where would the market structure shift be? Right here. And you would have to look at a stop above this high right here, because this is the only protected high. This is the only high that actually took out the liquidity. All right, guys, that about sums it up. I hope you found value in this video. If you want to learn more things like this, I do have a course. I recently released that. It's really cheap. It's only 50 bucks. Really cheap course, really valuable. So if you're interested in that, you can find a link to that in the description. You can also join my free Discord. In Discord, you will find a lot of value as well. If you decide to buy the course, you also get premium Discord access, where you will get access to trade reviews. I can jump in a support chat with you and so much more. You can check all of that out in the Discord or on the website, which you can also find in the description. Thank you guys so much for watching, and I will catch you in the next video. Talk to you later. Bye-bye.